Hey everybody, hey traders. Happy Tuesday. Welcome back. This is a video update for the final hour. I'll premiere this on my YouTube channel at 3 p.m. Eastern Time. So just wanted to have a discussion around some of the technical levels I've talked about the last couple of weeks. Short-term bullish is what I see. We'll have a look and see if we can get back up to the Wednesday, April 9th highs. Let's dive into the charts. So today the markets are up. I looked at the top 10 most traded stocks earnings. We have earnings this week and next week that are all pretty key. Coming in today, you've got Tesla aftermarket. COF is Capital One aftermarket. Some other notables: Boeing is this week. AT&T is this week. Procter & Gamble, PepsiCo, Comcast, Google, which is Google A and B. So GOOGL and GOOG. Intel aftermarket on Thursday. T-Mobile, I said earlier, that's TMUS. Friday, we have Phillips 66. I was looking at that one, PSX. Next week is a big one, Tuesday to Thursday, to wrap up the month. We have some more Mag 7 sprinkled in. Meta, Microsoft, Qualcomm will be interesting. Apple, Amazon, Airbnb I'll be watching as well. So definitely have some earnings plays. I'll look at a pricing some of these, see which ones are sensitive, which ones hit expected moves and earnings. We've had a lot of volatility intraday. Some of the expected moves, I mean, I want to say that the daily trading range for the SPY right now is over 8 points. The daily trading range for the Nasdaq or the QQQ is over 10 points. Even today, I mean, look at the prices. It's 1:10 p.m. or 1:11 p.m. Eastern Time, 2.32% after a gap higher over 1%. Nasdaq is up 2.62. Q's up 2.62. Dow is up over 2%. Russell's up over 2%. VIX is down a decent amount today. So this is 2 days in a row. One of my services, daily profit play, we have had a strong directional move. Yesterday ended up coming back at the end. We had another strong directional move. I ended up getting out of the trade on this little dip right here. That was enough to get me out for 2 trades, 2 winners, small profit, not super awesome. It is starting to fall back a little bit, but I don't like waiting on these trades until 1, 2 in the afternoon. I like to get out of these trades by usually like 11 a.m. to probably noon at the latest. So it did cooperate, grabbed a couple winners, and right here, it's falling back in line where we need it to be, which is below 52.80. But nevertheless, survived yesterday and survived today. Had a couple of wins. It's fine. Waterfall income trades are actually looking pretty good. So if I go into waterfall, I have a trade set up on Q's, which is already starting to show some profit. We're up about 30% on that trade. SPX, those are the DPPs that closed out today for daily profit play. This waterfall trade, I need to see if price will stay above 52.30. This is out to May 16th, so we have a couple more weeks on this one. SPY has some waterfall opportunities. Closed out a little win on a butterfly today. Waterfall here up 29.4%. Waterfall here up 12.3%. Waterfall here up 33%. I wouldn't be offended by closing these trades, but they are small winners. I'm looking for a bit more. If I can go, 48 cents, 65 cents, 51 cents, I'm going to try to get a little bit more decay out of this. I'll try to go after 50% take profit on these and then move on. But SPY's got a decent looking setup. And then waterfall one more here. If we stay above 520, we're trading at 527. Again, out until May. We'll keep an eye on this one to see if we can stay above 520 with recent resistance levels around the 540 handle. So let's go to the bigger picture here. Netflix had earnings. I posted this last week. This is part of my newsbreaker service. We are sitting in some small profit on Netflix right now. We still have another week to go. The expiration is May 2nd, so I'm looking to see if the market overall remains bullish. It would be nice to see some winner on Netflix. So it's a smaller win right now, but still, I'm up about 6 or 7%. Prices are fluctuating. I need prices to stay above 10.45. But there's more time in the trade, so I'll continue to monitor. If the markets, this is what I really wanted to address today, is the direction. So, based on today's price action, I'm not super bullish. I mean, we are still right in the middle of all this noise, as you can see. This low from April 7th and the high from April 9th. High from April 9th, low from April 7th, and we're right in the middle. Now, I did look at a potential, iron condor trade to see if that was worth selling some premium. It kind of wasn't. I mean, I think I collected about $2 on a $10 wide risk going out about 40 days. I didn't love that trade, especially if this market is going to one, revisit lows, or two, try to get up and find some highs. I just think we're coiling into some type of directional move. To my best ability, I think that if we are using this low from Monday, I think that the market has the ability to get back up and try to retest this failed attempt at the April 9th high, or better yet, would be being able to get up to the April 9th high. And that would be a swing, a little flat pattern, and it coming back up to resistance. Now, the key level here would be if the market breaks above, that's a pretty encouraging sign by the bulls. My only concern is that this isn't going to be sustained, and this is going to be a great spot for the bears to load back up and then take the market back down, at least for a correction. Not necessarily all the way back down to lows, but could that be the case? Possibly. Anyway, last couple weeks videos have talked about this kind of structure where, we have a 13.3% swing, and every day could be noisy. Every day could be challenging. In fact, watching price right now, we hit a high today on the SPY around 529. It's already down about 5.5 to 6 points. So just a lot of intraday volatility. Okay. SPX this morning gapped higher, ran up from, the close yesterday was 51.57. We ran all the way up to 53.10. So, 150 points? Yeah, 150 points, that's not nothing. And we push up, dropping as well. We've given up 50 quick points in the last, hour of trading, and it might just settle back in and be no worse or no better than where it started. So lots of intraday swings, trying to pick the intraday battles very carefully, not taking a lot of risk. I actually thought about doing a synthetic long. I just talked myself out of it for probably good reason. I'm just not super confident that this is the low that I say this is a great spot to be long. It's not. If I'm looking at something near-term directional, I would much rather be long if we come back and revisit lows, and then I can start taking some, 30, 60, 90-day bites to see, are we able to claw our way out of a bear trap? If it's really messy in here, this is going to be a spot where, any type of uptick is going to be good for the portfolio. Any type of downtick will be a red day. But I'm just hoping that because I sold a lot of premium at these lows, there's enough time to get out of these trades with some profit. So overall today, a nice little P&L swing. P&L is positive on the year, which I'll take that as a victory for right now. And I'm obviously looking to go a lot higher than that. But for the current trades that I have running, there's a decent amount of profit. Hedges are working out pretty well if needed. I do have copper that's likely going to close out here in 2 days for a full win, so I'm happy with that one. Earnings trades, I've sold a lot of covered calls. I did some adjustments. I'm taking a trade on Tesla, which is I own the shares. So here's an example. I have some shares, 1, 2, 3, 4, 5. Let me make sure I've got that. I want to see I've got covered calls. Modified collar. That's an earnings play. So this is 25th. This is 1, 2, 3, 4. That's an earnings play. There we go. And then this is a naked put. All right. So I put a modified collar on this, and what this means is I was assigned shares, and I should have 1, 2, 3, 4, 5 collars on. I have 1, 2, 3, 4, 5 accounts that all have over 100 shares. So the point of this trade is I do have some protection out to May 9th, which is out 17 days. The goal of this trade is if price is down with a disappointing earnings report, Tesla right now is trading around 238. If we have a big jump in earnings to the downside, let's say it gaps to, 210, 205, $200, the expected move, by the way, based on this, where's my news trade here? So the expected move is somewhere around the $200 handle. So if we push to $200 or lower, then that 150 put should see a nice little chunk of profit. So I can turn, about $1.58 into maybe $3, maybe more. I did a little bit higher contract size. So if I can end up grabbing, let's say $500 to $1,000 of profit, that would be $5 or $10 off of my break-even price, which is now around 247. So I'm only doing the cover call at 257 in case the earnings are positive. This would end up grabbing me about $1,000 per contract or per account, so I'd grab about 5K. I'd also look to roll it. If earnings are solid on Tesla, I would look to roll it out another week and try to generate another $2 to $3 to $4 of income. I did this a few weeks ago. It took me 2 weeks to repair a trade. I took some assignment, flipped it around, made about $7,000 in Tesla. I'm looking to do something very similar to that, with maybe same amount, maybe a little bit more. But I'd be happy making anywhere between $5,000 and $10,000 on Tesla. But it's not going to be easy. If price goes down, I'll sell premium very aggressively. I'll lower my cost basis as quickly as possible. I do have an expiration out here into May with lows at 195, and then one that's also watching the 245 handle. So I don't necessarily want to keep another chunk of shares. I can afford to do so, but I'm not really planning on that. So I'd like to see if Tesla can come back into, let's say, the 200 moving average. If earnings are stable, solid, if Mag 7 as a whole, if the market as a whole can hold where it is, I think that this low could hold, and we could see a move back up in towards this previous high and into this 200 moving average. If that is the case, then sure, I get shares called away around 260. I can roll a little bit, get some extra income, but I wouldn't be planning on Tesla going too much higher than maybe $280, maybe some round number resistance around $300. But that would be a decent little upside of about $45. If it goes to the downside, we do have some strong support around the 190 to 180 handle. Anything beyond that, I think I'd be looking for some aggressive, debit spreads to see if I can do a gap fill over maybe a 30 to 60 day window. But it's a high premium stock, and it's also a high option volume stock, and it's very liquid. It's a good trade. It's an income trade. I'm not looking to do anything crazy long term. I'm curious if this is a kind of a bear trap scenario where the market's made a little bit of support here. Do earnings gap this thing lower, but then it starts to come back and fill the gap? If that is the case, we could be looking at a bottoming pattern. Now that I kind of draw that out, if we have lows here and the floor breaks, but we come right back up and settle in over here, anything on the right hand side of the trend line looks a lot more bullish. Is it the coast clear for Tesla? Of course not. And there's a lot of additional developments that have to happen for me to say, hey, look, I'm very bullish on Tesla. I mean, I don't know. We're still trading at like 105 to 110 times earnings. It's very expensive compared to others fundamentally. So, I'm really trying to utilize the high premiums to lower the cost basis and try to flip it for some income and repairs. And then longer term, I'll just stay with some of my allocations here. I did buy some shares. And down here at the 215 level, I did buy some more shares. So that's the plan this week on Tesla. Mag 7, just take a look here. This is another one that I'm watching very closely, simply because I wouldn't mind taking some trades. Look, you can trade each Mag 7 stock individually, or you can trade mags. Now, I don't think this is the safest, and obviously we could have a much deeper pullback, but from recent highs to lows, I mean, this instrument is down about 33.5% from high to low. If it goes lower than that, I do want to look and see just overall what are the price to earnings, price to sales ratios on Mag 7 stocks, because I wouldn't mind taking a long position here. I do think that for the market to stabilize and the market to protect this floor that we had around 48.30 on April 7th, I think that Mags 7 stocks have to come in with solid earnings. If they don't come in with solid earnings, then that's big market cap being dumped. That's probably more sell pressure on the U.S. market in general. If mags can't do well, which by the way, they did get us out of the bear market in 2022, so that's pretty important to note, right? So if they don't have good earnings, or they're showing lots of pessimism moving forward with the tariff uncertainty and the trade war, who knows? I don't think there's any reason to take big risk and big direction plays right now. This, as you can see, just going back to the index, we are in a very indecisive zone. We broke some major support right here. We have some major support right here. We're trading right in the middle. That gives me very little confidence to be directional. So I think the best play, and I've highlighted this in a few videos, is if we come back down to revisit lows, I'm willing to take some bites down here and get directional. If we come back up here to the upside, de-risk, de-leverage, dump some of the positions you don't like, get out for break-evens or better, small losses, just manage the portfolio. If you've got things that are improving, get out of trouble. If the market offers it, get out of trouble. Because at this point, I think the bears would have a field day just stepping back in, calling some firm resistance, and then pushing the market right back down. So my preference would be, if we just go up, cool. less damage, less concern, less, headaches every single day. But we go back up here, hit the April 9th resistance. You can see it's pretty key resistance. I can see the market floating a little bit higher, getting the bulls just a little bit of hope, and then pull back. But the floor is important. I think this could be bear trap material. I would take some bites down there, unless things are just falling apart. If we start to see escalated trade war, if Jerome Powell gets fired, I don't even know if that's possible, but if somehow Trump makes it happen, I don't think that's going to be good for the market. I think you have all sorts of craziness and chaos ensue. So again, just everything is up for grabs. Throw out all the rules and all the playbooks that you have. The best thing you can do is trade with small risk and survive, and we will figure out some really good opportunities. That is what my plan is. There will be opportunities on the horizon, and the hardest part right now, is being patient. It really is. I am, every day that I'm watching this stuff, my patience is for the day. I try to let it go. I trade the next day. But as far as overall positioning, I know that right now this is not the spot to be directional. I know what this is this is about, treating my portfolio like a little bonsai tree and going in and pruning little things, taking little profits, washing, bad trades and trouble positions, selling more premium, adjusting and improving my cost basis. And eventually when I get a better opportunity or better levels, then I will be more directional. Okay. So we'll do a quick top down here for the next few minutes as I wrap up this video. So again, we're hanging in there for the day. Market has given back most of the morning. So we had a gap up from 52.07 with the open today, right around 52.06, up around 105 points or so, and we faded about half of that. If I've got traders in daily profit play that are sitting here, they should be in profit by now if you're still hanging out of that trade. Let me go back and see how they're doing. So I'm out of the trades for a couple of small winners. This one is trading about 215 to 220. So we're hitting those, close to profit targets, but there's a lot of volatility. And you can see that bid mid ask is a little bit wider. This trade here, trading for about $1.85, $1.90. That was my initial profit target this morning, which is around $1.85. So if you are hanging in there, just certainly take your profit, grab your 15 to 20% and be happy. But again, here it is. 1:20 in the afternoon, 1:27 in the afternoon, having to wait all morning to get paid on that trade, which is okay. We didn't take a ton of risk, didn't take a ton of heat, but it did, kind of threaten the call side a little bit because we were at 52.80. We ended up going up to 53.09. So I was fortunate to get out in here for a small win. Now it's back in offering our profit targets, but we had to wait an extra, almost 2 hours. So up to you if you want to hang on to it. I know we had some traders yesterday that contacted me and said, Chris, I waited all day for this trade. This was daily profit play, pressure all day, tested the put side, and then the last hour of the day rallied up 1.2% to finish above our put side and offered up, 2 to 3 winners where a lot of traders were still in and holding. Not my favorite way to trade it. So I bailed early, ended up grabbing a couple of the trades to finish net positive on the day. Today was a little bit simpler, held in there, and then once we had a decline, grabbed a small win. And didn't want to wait the extra hour as it's 1:28, and afternoons have been the times for the crazy stuff. There's obviously a lot of directional flows. Europe has closed all U.S. markets now, and there's no major news this week. So depending on the overall flows, I mean, yes, we have earnings, but we don't really have any major news on the calendar. Nothing from the Fed. There's some FOMC speakers. We have IMF meetings this week, but it's mostly earnings, and are they solid? So far, what I can tell, consensus-wise, it's a bit mixed. We've got some earnings that have beat top and bottom and prices haven't gone anywhere. We've got earnings that have missed in revenue, but prices are up. Beat on top and bottom, but prices are down. It's like a typical earnings season. What I am showing, though, is that the expected move is a little bit higher. We're talking about kind of implied volatility that's back to 2020 type price action. So that is something to be mindful of if you're trading any earnings this season. Okay, all right, VIX is, again, sticky. We're seeing some sticky VIX right around this 30 handle. This is not fun, and also at the price levels we're at with that 13.3% swing from April 7th to April 9th, the volatility here sticking around 30 is not going to make trading easy. Maybe some intraday trades. I wouldn't mind, grabbing some, like today, for example, looking at something very simple in the futures market. We started above the weekly VWAP. We started above the daily VWAP. And right around opening bell, you got some pretty simple price action on ES and NQ. So for some futures traders, like there is some directions, you are getting some good price action day to day. So if you're looking at being somewhat directional, we are getting some really nice swings. It just depends on how active you want to be, but not a bad way to position for it. If we're above session VWAP, above weekly VWAP, chances are you've got a chance to be bullish. If today we come all the way back down and settle in at VWAP, then it's a neutral day starting tomorrow, and we'll see if it goes, up or down, and just another wild and crazy noisy day. So let's do a couple more things on the watch list here. Sticky VIX around 30 is a little concerning. Let's have a look at the bond market. So TLT gapped higher but faded a little bit. TLT is a bit of a concern. I would like to think that there's going to be some rotation into bonds, but that rotation, and this is what I'd like to see. I mean, price action wise, I want to see bonds go up. I want to see TLT go up. If TLT goes up, then that means that the 10-year and the 20-year yields can go down. And I don't see that happening as of yet. So US 10-year is, again, higher than Liberation Day, way higher. We had this, pushing to around 3.87. The Trump administration taking a victory lap, saying we're below the 4 handle, yippee skippy, and then boom, bond market kind of broke there for a little bit, for a few days, and this is where the Trump put kind of came in, where they all of a sudden introduced a 90-day pause. So we're still way above that by about 30 basis points. That's a big difference. I don't know. I've talked about this in morning sessions. This isn't a political statement. This is just me being a centrist and being a trader. I don't think that calling for the Fed to cut rates right now is going to be a good idea, because last time that the Fed cut, the market didn't behave like it does for the past 40 years of the Fed cut cycle plus what yields do. When the Fed cut right here, the market did the opposite. So my concern is that if the Fed starts cutting, I get that they're going to probably cut in June, maybe 3-4 times this year. But the concern that I have is if they start to cut and the yields go higher, man, we have a broken correlation, and that's not a good sign. This means that there's essentially no relief in sight if the yields continue to go higher. And as I put in here, if we're greater than 5% on the 10-year, 20-year yields, I do think that something is going to break. Something in the bond market might break. We might be having a similar event to what we had in the UK. Let me go. I think it's is it UK 10-year? Yeah, look at what happened. This was 2022, I believe. It was right here. This would have been September 2022. Basically, the UK bond market broke. Okay. My concern, and you can see that it's holding here, but does that happen to the US? Do we have something that breaks in the US market? This is no joke. Like, this dropped 23% before the bank, like the Bank of England, had to step in and kind of backstop this thing. So go to the 20-year. I mean, is it possible that we have a move, to this low around 83 or lower? Have we been, lower on TLT? I mean, we're in a 4-year drawdown. Bonds are pretty much a terrible instrument right now, but can you imagine dropping 20% and all of a sudden this is down to like 70? And yes, it's going to be backstopped, and yes, there's going to be a bounce, but the casualties and the blowups and the issues that this would cause is so disruptive. And I do think that the government right now, the Trump administration, is watching bonds, because if they weren't, there wouldn't have been the 90-day pause. I think that was completely orchestrated with what the bond market was telling the government, which was, if you are not careful, something is going to break. And we had a little bit of a taste of that break with the 10-year yield and the 20-year yield, because the Liberation Day down here, celebrating way too prematurely, market rips up by about 3.9 to 4.6. You're talking 70 basis points, and that's one of the biggest moves we've seen, I think, ever in that short of a window. So way too much volatility in the bond market. And this is another instrument that I'm watching here. This is MOVE, which is the U.S. bond market option volatility. Again, lots of noise, lots of volatility. Okay, so got to be careful. Let's talk some stuff that looks a little bit better. We've had a pretty good run on gold. I continue to see gold as a good opportunity to stay long. Dips are fine. Dips are fine. I'm still interested in a correction. The more uncertainty we have in the markets, you're probably going to see gold maintain bid. I think any dips and pullbacks are probably looking pretty good to gold to stay long. The problem with gold for me is I don't have a number. If I'm long gold, I'm just throwing out there the percentage away from the 200 moving average. I'm throwing out a similar move that we saw back in 2009 to 2011 with a very high bar count and a long stretch away from the 200 moving average. So if there's any dips here, previous breakout points, 21 moving average, very shallow dips, I wouldn't mind allocating a little bit there. Let me just dot this up. A little bit at the 21, maybe testing a low and then waiting for my actual pullback zone. That would be the levels I'd like to trade gold. I may not get those. It might just be a little bit of a pullback. And if you're looking to scale in, I talked about this. If I had another 1% of my portfolio allocated to gold, I would take one trade basically here, another trade at a low, and another trade here. And so if I want to allocate 1%, it'd be a third, a third, a third. My dollar cost average would be around $3,000, and I would try to see if gold can make all-time highs again. Cool. I still like silver better because I can see the all-time highs in silver, and I can see that we can get back to those all-time highs. So if silver gets a run, $47 to $48 on silver has been hit twice in history. It was back in 2011 and back in 1980. So the nice thing is it's there, which gives me some belief that there is upside, but we do have to see this chart breakdown, which is XAU versus XAG. And right now, this was a multi-year range that gold just took off. And so now the gold to silver ratio is way overblown. I'm not saying that it has to put in a top. I'm not saying that all of a sudden silver has to outperform. But at some point, this is likely going to be, range bound. So even if we have a breakout move like so, and I don't know if this is technically based at all, but if I take this range and I clone it, put it on top, we've likely had that breakout fill. We're very close to kind of that gold silver ratio breakout filling, if that is what this is intending. So maybe I get lucky on this kind of being the top and silver can outperform. I'm not saying that gold has to underperform or go down for that matter, but basically I'm looking to see if silver can play catch up. Okay, another thing that was kind of encouraging today, I'm going to draw another line on this right here. Okay, I'm going to go to Bitcoin. Bitcoin also starting to show signs of breaking some trend lines, showing some really strong support here in the 75K mark. I had mentioned maybe some range-bound trading on the right-hand side of the trend line, but this looks pretty good. So I'd like to see Bitcoin. We've had a nice little clear and a push of these highs. If we go up, I think a pullback on Bitcoin, area 1 at the backside of the trend line, or if it comes back down to revisit the lows, area 2. Area 1, area 2, if this structure holds, now they're on the right-hand side of the trend line, I love some Bitcoin back at 108, 109. This could be yet another diversifier that is helping my portfolio kind of fight the good fight. I have Bitcoin longs, I have gold, silver longs, I have ETFs that are associated with those. So GLD, SLV, CEF, PHYS, all going long. Those are good diversifiers. I'm also long FXY, which is Japanese yen. I took some trades on 6J earlier this year. So, to see that the S&P is kind of back and forth, it's still struggling. There's no real clear sign of direction on stocks. It's nice to see that Bitcoin is hanging in there. MicroStrategy as a bit of a leverage proxy is up to 345. If it stays above, let me see where MicroStrategy has earnings. We have earnings May 1st. So this is also next week. Look, if Bitcoin is up, I would imagine MicroStrategy is going to be just fine. If Bitcoin is up, I'm sure MicroStrategy is fine. They have terrible earnings and have pretty much forever. But this is now like Bitcoin. That's what MicroStrategy represents. And it's up, here's 8.5% of MicroStrategy while Bitcoin's up 4%. You're getting like a 2x leverage instrument. Bitcoin's already volatile enough, but now MicroStrategy is kind of 2x that. And it's crazy to think that you have 2x MicroStrategy, which I think is MSTX. Like, traders are nuts if you're trading that stuff. There's already plenty of volatility in the markets. Coinbase back up to 190. Took some ratio spreads and took some profit out of that, which I'm happy with. Ethereum performing a little bit better, but I'm still not touching Ethereum. Bitcoin to me is the better play. Copper still looking good. Copper has made, look at this, just wild recovery. Copper dropped 25% in a matter of, this is crazy, from the 26th of March to, that's, what is that? Not even 2 weeks, maybe 1 to 2 weeks of trading. Dropped 25%, and here we are, ripping back up. So, this is my trade. This expires in 2 days. I'm pretty sure this is going to be a safe trade just to, get out for profit. But wow, what a wild ride that was. Non-US doing okay. I'm looking for, bullish cup and handle patterns on DAX, FEZ, China, HSI, also like looking for bullish patterns. Mags, like I said, watching to see if we have a retest of the lows on Mags. I'm looking at that as potential divergence, which I've noted on this alert. So 39.34 lows, look for divergence. What that means is this: if price goes at equal lows and I see divergence on relative strength, or price goes to slightly lower lows and I see divergence on relative strength and momentum, and even MACD, then I might be looking to take a long position and see if I can get a recovery trade. So, and it may not be like long term. I'm talking maybe 30, 60, 90 days. But I'll go back to just a really simple summary. I think there's good opportunities. I'm not looking to be a massive stock picker right now. I'm looking to find key levels on ETFs, indexes. I mean, the basket like this, an ETF that represents Mag 7 at, potentially $40 a share or $39 a share, that is a lot more cost effective than me trading every individual Mag 7 stock at, $200 to $300, $400. I mean, Netflix is $1,000. Meta is still $400 plus dollars. Amazon, Apple, almost $200. Google, $150. Like, I don't have the capital to just allocate, shares upon shares upon shares and just get in, but I can dollar cost average. I can allocate $2,500, $5,000, and I can dollar cost average. But the bigger returns are trading options, and if I can, turn this into a directional play, maybe make, $4, $5, $6 a share, turn it into a nice little income trade, flip it, try it, So we shall see. But that's it. Tesla earnings today after market. Let's see what happens. I'm protected at the downside. I'll be watching closely. If we have a surprise upside move in Tesla, that'd be great. I've got a covered call. I'll flip it. I'll make a few $1,000s on it, move on, and we'll see what happens through the month of May. Before I go officially, we'll just go right back to where it all started. Today, so far, up on the day, faded, just a noisy day. What does the day look like by the end? I have no idea. But if we are sitting here, so we started here, we filled this gap. Is the market interested at all in filling this gap by the end of the day? If that is the case, well, you can see that the bears kind of have the upper hand and they are still just driving prices lower. So if we can hold this gap, this would be kind of encouraging. If we can kind of hold the open today and not fill this gap, or I should say, like, let's say we use this area to offer some support. Well, maybe there's hope left in the bulls after all. But all this is a big noisy zone that I don't really have a directional trade. This is the tough part. Directionally, it is very complicated right now because we have a major low down here, right, and a major high up here, and the middle, who knows? It's anybody's guess. So if we have opportunity to buy low, I will buy low. If we have opportunities to de-risk, de-leverage, take some profits along the way up here, I will do that. I will probably reapply some hedges as well. But right now, we are in no man's land. So I'm just going to X this out. So it's short-term trading. I'm looking at combinations of selling premium and SPX and maybe taking a couple stabs at futures trades just to get some intraday swings. But that is about it. Okay. All right, everybody. Thanks for watching. Thanks for being here. And kindly hit the thumbs up button for me. That helps the YouTube algorithm. We're getting a nice little inflow of subscribers every single day. I'll continue to put out good content, good trust content, try and help traders along the way. And I'm posting videos on YouTube, on X, on TradingView, on my Discord, on my Telegram channel. So all sorts of ways to find me. But it does help if you just like and subscribe on YouTube. That helps grow the channel organically. And the more the merrier. Here to help. All right, everybody. Have a trade, lots of profit. See you soon. Thanks.